First-time buyers often come to me and say that their loan amount has been reduced by the mortgage lender that they've applied with for their mortgage. When I have a look into it a bit closer, I often see a recurring pattern. There are always three elements that cause the main problem of a mortgage lender reducing the amount you can borrow. What I'm going to do, I'm going to jump on the computer and show you an affordability calculation and show you some software which calculates the amount you can borrow with over 70 plus mortgage lenders. And as we go through filling in the details, we can touch on the different areas that first-time buyers forget to include as expenses. Then the mortgage lender looks into the bank statements, sees these expenses that haven't been included within the mortgage application, and therefore, as a result, reduces the loan amount you can borrow. Let's make sure that doesn't happen to you. Right, so here we are. I'm just going to scroll down. My details are already filled in. I've pre-filled quite a few bits. So this is for a first-time buyer. Let's say buying a property for, say, £250,000 and standard ownership, and with a loan amount of, say, let's go with 225, so we're putting a 10% deposit down. Let's go with 25 years, and let's choose a fixed rate. I want to know 5 and 10 year fixed rates. Sometimes lenders lend more if you go for a 5-year fixed rate or more. I've filled in all my details, date of birth, employment, all that sort of stuff, and expenses. I've put some council tax in there, a few little bits. It automatically puts in household expenses, says defaulted to ONS, which is the national statistics. So as we start scrolling down, childcare, student loans, they are 2 of 3 deductions that I see regularly that are not put in calculations. If you have childcare deducted or if you have student loans deducted, then they must go in. So let's put £50 a month to a student loan. Just keep scrolling down. No credit cards or loans. And here's the final one, pension contributions. Again, they will appear on your payslip. So let's put £50 per month for that one. Vital that they are included within the application. Okay, so everything's filled in, employment details, the mortgage products I want, expenses, all that sort of stuff. Pension payments, student loan payments. Don't need to put any childcare in, but if you do pay childcare, it needs to go in. Then we're going to press Get Affordability Results. Now what this is doing is tapping into over 70 mortgage lenders in one go and working out how much we can borrow with each lender. Incidentally, this software is included in our mentorship program, our online course called First Time Buyer Expert, where you get a month completely free with this software. It's part of our course which helps first-time buyers become homeowners. If you want to check that out further, please just see the link in the corner of the screen or in the description below. Right, the affordability is finished. Let's take a look. So as we scroll down, we can see starting from the top, you've got Even, who's an equity loan, Tipton and Even, Kensington and Even, the 2 mortgage lenders who combine with a equity loan. So they're going to lend the most because it's a top up of the mortgage lender's amount as well. Precise Mortgages, Nationwide, 2 amounts with Nationwide. One, what they'll lend you on their standard borrowing, and the other if you go for a 5-year or more. And we can scroll down. So all these green figures are affordable, and we scroll down, the red ones, we're not quite getting there. We wanted to borrow 225,000, 224.5. I mean, it's not too far off. And you can see all the products that are applicable to us here. I can even click on this element here and open that up, and it will show me all the workings out within the Nationwide calculator that has pre-populated over, all in the click of a button. So great, we've got some options. That is what I was hoping for, and we've got plenty of options if we scroll down, and are happy to take a little bit of a lower amount as well. But let's say we need the full 225, and you can go even one further. I'm just going to click on the sourcing button here, And it is now working out of all the lenders that are applicable to us, that will lend us the loan amount, who's got the best rates. And that is clearly nationwide. What I did here is, instead of starting it with the lowest rate moving down, you want total initial cost, because that takes all fees into account as well. So we can see this top deal is the best, £1,346.98 a month, fixed rate, 5 years, 5.24%. What we can do is just scroll to the bottom, look across and get more information. Maximum affordable amounts, lots of information, total cost, reversion payment, which is the rate after the fixed rate ends, cashback £500, the lender's fees, total fees, early repayment charge period. So much information there. And we know this one's the best, so I can tick that, and that has now saved that product as a favourite. And there we go. We can click on this. Gives us all the information that we need about this product. So there we go. In the click of a button, I can calculate with over 70 mortgage lenders exactly to the penny how much they will lend, and also include vital information which is often missed by first-time buyers. So just to clarify, that is student loans, childcare, and pension payments, pension contributions that you make, not the employer. They will show on your payslip, and they are often the cause of mortgage lenders reducing the loan amount you can borrow. So make sure you get your mortgage calculations correct before you apply for a mortgage or an agreement in principle, and the best way to do that is using the mortgage lender's calculator and making sure you've input everything. Otherwise they'll look on your bank statements and then add them on, and that will reduce the loan amount. And of course, if you want access to our software and our whole entire mentorship program, please just have a look at the link in the corner of the screen or in the description below, or just go to firsttimebuyerexpert.co.uk. It really is vital to calculate the loan amount correctly, especially in today's market where the cost of living and inflation and everything like that, and lenders' calculations have changed so much. It's no longer easy as 4.5 times your income and that sort of stuff. You've got to do this properly. Any questions, let me know.